Welcome to another episode of the Apex Perspective podcast. Today, I have the absolute pleasure to sit down with Patrick Henry. Patrick has become a serial entrepreneur. He's led multiple companies. But Patrick, can I hear from your perspective, what led you to entrepreneurship?
Yeah, I mean, my entrepreneurial journey, I guess, is a bit different in that I didn't, go out to start companies. I actually worked in industry, worked in Silicon Valley after graduate school for about 10 years and progressively worked my way up in some of the bigger tech companies. And then we sold one of them to a really big tech company. And at that point, it was quite stifling, quite bureaucratic. So I got the opportunity to go in and run my first company in 2001. So I've run a total of 5 technology startups. I've had multiple exits, took a company public, drove it to over $1 billion valuation. And now I'm working with Charbel at Oculi, trying to make it the next great tech success story.
Excellent. So let's start off a little bit more about that first entrepreneurship journey. I know beforehand you led at the executive level at multiple companies. You got acquainted with marketing specifically, and of course other operations. So what led you to first become an entrepreneur? Was there a specific gap you identified? Was there a particular reason for yourself, or what compelled you to start becoming an entrepreneur?
I would say it was complete frustration with the bureaucratic nature and decision-making process of a large tech company. The prior company that we sold to the big company, we were still decent size. We were doing about 500 million in revenue, very successful tech company in Silicon Valley. But, scale matters. And, we were in one of the kind of downturns that happens in our industry. So we decided to sell the company. I was running a big business unit. We're doing about $1 billion in revenue, and had a lot of people working for me. I had 1,000 people working for me. But the whole way the decision process was set up, it would take us 6 months to make a decision that at the previous company would take us like 2 or 3 weeks. So I was just completely frustrated with the entire process, and I understand why that's the case. But I got approached by a headhunter to run a company in Southern California. It was one of the early companies in Wi-Fi, and made the jump, and no looking back after that.
Right, and I see here first one was Quest Fusion, and it was focusing on helping startups when it comes to getting their foot planted and planting their flag essentially. So tell me a little bit more about really those perspectives you led with when it comes to Quest Fusion. What was the thesis behind the startup culture and what you saw as the main direction that startup should be going?
Yeah, actually, Quest Fusion was after I'd run three different tech companies. So first tech company I ran was a Wi-Fi company. The second one was doing what we call CMOS image sensors. They're the sensors that go in your phones for taking pictures. And they also did digital still camera processors where, back then you had separate cameras that were digital cameras compared to analog film cameras.
You were the founder of Quest Fusion, right?
I did found Quest Fusion,
yes.
but this was after I did Lincom, Ampictos, and Entropic. And Entropic, I was there for 11 years and took the company public. So after we sold Entropic to MaxLinear, I basically had been running a public company for 7 years. I've been with Entropic for a total of 11 years. And I just kind of needed a break. So I just started doing some blogging and wrote a book, and was helping entrepreneurs. So it's kind of how I got involved with it. I had a lot of experience at that point in terms of what to do and what not to do as it relates to raising capital, building businesses, all of those kinds of things that a lot of people, the first time they go into raising money or building a company that's a venture-backed startup, there's a lot of things you just don't know because you have no experience with it. So I was trying to convey my experience with that to other entrepreneurs, and made some angel investments, and did some consulting and some advisory work. And then eventually one of the companies I invested in and was advising, and I joined as their CEO. So that was the company in the water management space.
Well, beforehand, you've led multiple companies and lots of growth in those specific companies. Well, what was the kind of perspectives that you were seeing, or let's just say, what are the kind of things you're seeing that are going wrong with most startups, and that maybe is a misconception with starting a company?
Yeah, I mean, there's been a lot of research around this, but there's a handful of things that are, really challenges. I mean, first thing is like when joining a company, a startup, or building a business, or investing in a startup or anything like that, I look at just a handful of key factors.
Mhm.
Is there a real customer problem, and your solution has a unique way of addressing that problem in a very cost-effective way? So I call
Mhm.
it a 10x. It's either got a 10x improvement in performance or a 10x reduction in cost, or some
Mhm.
combination of those two. So problem solution. Then it's like, is the market big? If the market's not going to be massive and grow very
Right.
fast,
Of
but
course.
you gotta be early, but not too early. So timing really matters in terms of like, are all the, I call it the ecosystem, is the ecosystem in place to make that market take off? I'll give you an example. So
Mhm.
there was a company that was in the video streaming business before YouTube, that it was before there was high speed broadband to the home. So without having high speed broadband to the home, there's a limitation on how much business you can drive,
Right.
streaming video company. So that's the timing element of it. And you can't always time things perfectly. That's why you got to be a little bit early. You can't be late, but you can't be too early, because then you can raise a lot of money and then not have a big success. So problem solution, market size, market growth, unique, a sustainable competitive advantage, a unique value proposition, and assuming
Mhm.
all those things are true, then you have to have the right team, the team that knows
Right.
how to go to market and knows how to build a business.
Well, let's talk about the problem, because if you don't have the problem correct, then nothing else can really matter, right? So how do you distinguish between what a customer says they want versus what they actually might need?
Yeah, it reminds me of I had a conversation. This is when I was still running marketing at one of the Silicon Valley companies. I was talking to my CEO, and he said, "You got to listen to the customer, but not too closely." And what he meant by that is the customer will tell you what they want today, and
Mhm.
you got to kind of anticipate what they're going to want, 12 months from now, what they're going to want 18 months from now. So one of the things you do to understand that better is you look downstream to the customer's customer and kind of what are they asking for and those types of things. So
Mhm.
that's number one. Number two is the problem extremely painful? So if it's not in
Mhm.
the customer's top one or two key pain points, they're probably not that interested in addressing it. It's a problem, but it's not painful enough. So your solution has to deliver kind of the antidote to that pain,
Mhm.
and
Mhm.
it needs to be articulated in such a way that the customer gets it.
Right.
And that's a skill set in and of itself, is being able to explain something in the customer's language, not your, speeds and feeds, technical jargon, but how your
Mhm.
solution actually addresses the problem that they're trying to solve.
Right. So I'm assuming that at Quest Fusion, working with startups, I'm assuming some of them had new solutions to the market that were not there beforehand. Now, how do you know? Well, maybe this is a better question. How do you communicate potentially? This could be the story of the iPhone. The iPhone, right? No one knew that they would want an application device until it actually became a thing. So how does a startup with a completely new solution identify if this is something that could actually work? What are the key components to look for?
Yeah, I mean, even with the iPhone, the iPad came before the iPhone. So there was good
Oh,
market
right.
data out there in terms of they had moved from a laptop with a keyboard to something that was bigger form factor, but had apps on it, had, different things like that. So there was actually some market research going on
Okay.
around smartphones before smartphones came out based on tablets. But that aside, if you look at I've looked at hundreds of companies. Most ideas are bad, and entrepreneurs think their idea is the most brilliant thing that the world has ever seen. So that's kind of like getting people in touch with reality is the first thing. And sometimes you can, sometimes you can't. But I think that you this gets back to kind of the idea of the lean startup. And even before the lean
Hmm.
startup was printed, we knew about this. You want a prototype. You want to get things in the customer's hands
Hmm.
that the lowest cost possible, that allows them to give you feedback. Being early, that's why being early is important. So the
Okay.
first mover advantage is only an advantage if you get it in the customer's hands and you're getting feedback. So that means you got to select the right customers that are going to be what I call teaching customers as early access partners. And you can take something to them, might not be fully baked. It's more than half baked, but it's fully baked. And they're providing you feedback and they're willing to do that. So these are the, in the product lifecycle curve, which you're probably familiar with from business school, these are the innovators and the early adopters, and identifying people with those characteristics is really important as you're looking at igniting, a new market. And even if there's no other competitors in the market, there's alternative ways of solving it. These are substitute products. These are
indirect competitors,
entrants, all the things you look at, like in a Porter 5 Forces model for strategic planning. Those are all things that you need to consider when you're looking at a market opportunity. And sometimes it works, sometimes it doesn't. So sometimes it works partially, and you need to pivot, or you need to adapt, and that's part of the game of building startup companies.
And that's why it leads me to a very important question about pivoting, right? Because as a startup, there could be potential perceptions of when the right time it is to pivot, but can you really understand and be able to explain what is the right time for pivoting, or is that something that's a bit more, I guess, nuanced?
Yeah, I mean, first off, I would like to define what a pivot is. So if you look at a product market segment, I'm building a solution for a product market segment. And if I'm kind of refining that product within that product market segment, I don't consider that a pivot. I consider that like iteration, stepwise refinement. You're learning as you're talking to the customer. A pivot is going into either a new market or a new product area outside of this initial product market segment. So the reason why you do that is because this doesn't work. So but you have something. You have either a product that maybe you can adapt to a different market, or a market that, like, I can adapt what I have from a product standpoint to go into that market opportunity. So that's how I define a pivot. And the data that's out there about success and failure of startups is, like, it's super high percentage. Like over 95% of companies that are successful have had at least one pivot. But companies that had 2 or 3 pivots, there's like a 95% chance that they won't be successful. So, being able to iterate and use stepwise refinement is critical, but you really get one chance at making a pivot, typically.
Right. So let's talk a little bit more about the executive leadership you've had in the past. I believe at Entropic Communications, you led and were able to drive some successful acquisitions. Now, in my studying of mergers and acquisitions, there was one situation and case that was quite, I would say, popular between eBay and Skype. I believe eBay acquired Skype, and this was around 2005, with the belief that the people who are on the marketplace can communicate a bit easier with the integration of Skype. Now, what was not predicted was the human behavior side of things of that acquisition. Strangers did not want to communicate because they're strangers, essentially, and that was the reason why essentially it was an unsuccessful acquisition. So how did you evaluate these companies for acquisition purposes and the value it would provide your current company?
Yeah, I mean, there's 2 big elements of it. One is, how are they either extending your product line within an existing market where you have customer relationships. And this is kind of the Cisco acquisition model. When they were acquiring a lot of companies, they basically had market channels that they developed, and they would bolt these small companies, and then to the company that was selling, it'd be worth this much, but to Cisco, it'd be worth this much, because they could bolt it onto their channels and sell it to a much larger customer group. So that's basically a product line extension within an existing market. The other possibility is, I've got, a new market opportunity that's adjacent to what I'm doing. Like it's, for instance, some of the acquisitions we did at Entropic were related to, we did the communication piece. Somebody else was doing the media processing piece. So there was a company for sale that was doing the media processing. So we did one of those. Then we did one that was more like a product line extension. We had business in the direct broadcast satellite customer base, and there was a company that had other technology to sell into that customer base. So we bought that company. So if you go too far afield where you're not either leveraging your customer, your market expertise or your product expertise, then it gets kind of dicey.
Excellent. So let's go ahead and move this conversation to more about Oculi. When did you join the company, and why did you choose to join the company?
Yeah. So first off, what Oculi is doing, if you look at the sensors that are in your phone for taking pictures, those are called image sensors. And they basically are designed to capture a high resolution image or a high resolution video. And that's not how your eye works. Your eye basically captures basic information, and then your brain interprets what you're seeing. That's vision technology, not imaging technology. So Oculi has developed, machine vision technology that duplicates kind of what your eye does, but with the power of machines. So we can either operate at extremely low power and low latency, or at extremely high frame rate capture. But still, it significantly lowers system level cost. It significantly lowers system level power consumption. It provides privacy that's not available with image sensors. So, facial recognition, you're not going to have all the information necessary to do that. So privacy is very important for a lot of these applications, and low latency. So it can move really quick. So as I sold my last company, GroGuru, back in August of last year. That was in the water management space, an ag tech company in the commercial agriculture market. And I was an executive in residence for Evo Nexus. I've been involved with them for over 20 years in various capacities. And Oculi was looking for a CEO. They had kind of gotten to the point of really technology validation, and they were looking at how can we scale the company and take it to the next level. So I started having conversations with Charbel and Ernest about the position in January of this year. And I joined about a little over a month ago.
Love it. So when it comes to,
we talked about big market, can grow fast, differentiated technology, all those things. That's why I joined, because this is a big opportunity. Lots of challenges.
Sounds very compelling.
A massive opportunity.
Right. And when it comes to Oculi specifically, I was curious about the technology itself. How did the founders identify this gap, and how it could be potentially very valuable to the customers?
So Charbel, while he was still a university professor at Johns Hopkins, he was also doing a lot of research in this area. He was involved very early in his career around kind of drone technology, and he identified that one of the real limitations on autonomous drones was vision. They don't have vision. So he devoted most of his research at Johns Hopkins to this area. So he's one of the world's leading, maybe the world leading expert in vision technology. So he developed a lot of different technologies for the Defense Department, around vision technology. And then eventually what we did is he carved that out from Johns Hopkins. We have a licensing deal with Johns Hopkins where we pay, a small percentage of sales price and royalties to Johns Hopkins for the patents that we got from them. So it was about $20 million worth of investment that they made in all these technologies. And then we've continued to extend that technology beyond that. So Charbel's done a fabulous job kind of opening doors, raising some initial money, improving the use cases, and, we're looking to take the company to the next level.
Right. Now, if I'm understanding this properly, this vision sensor, it should be it can be applied to many different use cases. So correct. What are those use cases that are primarily being used right now, and what could it also extend to as well? Because this is something that's widely applicable.
Yeah. So the initial use case that we're focusing on is what I would call smart presence detection. So there's all these sensors out there that do presence detection, but they're dumb sensors. They're not smart. So for instance, there's a crazy example. So, you've got the sensors that can open doors, as you kind of walk up to them. And, in Japan, they have a problem with black bears, getting into apartment buildings and getting into, because they're smart, they figure out how to open the doors and go in and eat the food inside, the Japanese 7-Eleven.
Yeah. That's interesting.
So what you want to do is you want to know, hey, a bear's walking into my store, and capture the
Oh, you
bear.
definitely want to know.
But you don't want to capture humans.
Right.
Just walking into the store. But some of the things are like, if you're familiar with Tesla, they've got Sentry mode on their car, silent Sentry mode.
Yeah.
But that drains the battery, and you can never put that onto a gas-powered car because the battery is really small. So you need a very low-power solution for that. In-building presence detection, where you want to identify how many people are there, but you don't want to do facial recognition. You want to maintain privacy. So this is this whole area of kind of smart presence
Very
detection,
interesting.
which is ultra low power, and but you're providing vision capability, so it has a lot of intelligence, because you want to say this is a human, this is not a human, this is
accuracy.
A dog. So that's one trajectory. The next trajectory that we have more on the R&D side, and Charbel did a lot of work around this at Hopkins, is the very high-speed capture. So these are called event sensors. So this is both in military drone applications as well as industrial automation. And then ultimately, we want to develop like 3D vision. So this for things like autonomous vehicles, and for let's see what other applications we have there. Humanoid robots, physical AI. So physical. So we've got a big roadmap. And one of the great things about Oculi is massive market opportunity with lots of different applications.
Right.
But that's the problem. So that's all. It's wonderful.
The focus. The focus.
Want to go after initially, focus on initial customers, initial applications, drive those market opportunities, and then use that as a flywheel to perpetuate the technology roadmap.
Urgently, do you think safety and security is the focus, or is it something else?
I think safety and security for smart presence detection is a big part of the market, no question about it. And it's a big problem, and there's not a good solution right now. Right. So especially for battery powered applications, if you look at kind of the amount of power that like a CMOS image sensor that's used in your camera phone, if it's operating continuously all the time, it's going to burn like 400,000 times more power than our solution does. So, yeah.
Right. So as
back, we can say, okay, Aaron, I want to identify you person, not person. I basically dial up how much image I need to do. Then once I know you're there, I don't need to kind of continue to take your picture, because it's not for a podcast. It's just, I know you're in the building, or I know you're around, and I can dial it back, but I know you're there.
Exactly. So when it comes to being CEO of this company, how do you choose what focus to have first? Because as you said, this will be applicable to a lot of the market essentially. So how do you choose to focus? What's your decision-making process on that?
Well, Charbel and the team had already made the decision to focus initially on the ultra low power application, kind of the smart presence detection, because we were getting good customer traction and feedback around that. So we've got customers lined up, and they're big name customers. So now it's just a matter of kind of driving that initial volume in that market, and then raising more capital and kind of perpetuating the bigger roadmap.
Excellent. So what we'd like to do now is go ahead and shift the conversation to a little bit more about you, Patrick, on the personal side. The first question I have for you is, what is something about you or your life that you wish more people knew about? It's a tough question.
I'm a pretty private person.
Yeah. What's interesting is this is the most difficult question. This is the most difficult question for most people.
I mean, I've got 4 kids, so they're adults, but that's a big part of my life is my family life. Health and fitness is very important to me. I'm not an athlete anymore. I still think of myself as an athlete, but I like to snow ski. I like to play golf. I like to play tennis. So those are things I'm interested in for sure. And I love giving back to my community, whether it be kind of in the entrepreneurial space or in my faith walk or whatever it might be. Those are things that are important to me.
What do you think is the biggest difference between you in your 20s and 30s and now?
I'm more patient. I'm more present. I'm more, I still feel like I have that passion and drive, but one of the things was explained to me kind of early in my career. I mean, I'm a fast thinker, fast doer, fast whatever. So one of my CEOs, when I was still working in Silicon Valley, he was like, your decision is right, but you've got to slow down a little bit to bring the team along with you. I think that's been something that I've worked on throughout my career, and I'm much better at it now than I ever have been in the past.
Right. How do you slow down and become more patient?
You listen a lot more. You have to make decisions about what is really truly an important and urgent decision versus what's something you can have a little more time. Like when people talk about, what's your management style? I mean, I would say if you're a good leader, a good manager, it has to be adaptable. If you're putting out fires, everybody needs to grab a hose and a bucket and you need to get active. If you're building houses, it's a different story. You have a little more time. You can make a few more mistakes. You just can't make fundamental mistakes. So I think that you have to know the situation that you're in, and focus also helps. It's like, what are the most critically important things that we have to do? And what's the real timeline for having to make those decisions? And instead of just like moving forward and kind of running with a decision, part of bringing people along is getting their inputs, getting their insights. And, when you're able to do that, you get better decisions anyway, because everybody's got a good, different, unique perspective.
Okay, let's go ahead and move this conversation to a little bit more about your plans for this year. And we'll go ahead and conclude with those specific plans, whether that's professionally or personally.
So what are my plans for this year, for the balance of this year?
Both, whether it's professional or personal, what are some plans for you this year?
Yeah, I mean, one of the big things that we're doing. We're closing a financing round. That's key for us. That's in the works. We're going to launch our first product. We're going to be sampling that at CES next year, which is in January. We're working with some big partners around that launch. So that's exciting for us, and kind of using that as momentum to kind of drive some additional business. Those are the big goals from a company standpoint. Personally, and kind of that area, I mean, I'm very focused on my health and wellness. I've made, as you get older, things change. It's like things that worked in the past aren't necessarily the things that work in the current situation. So I've kind of dialed in my nutrition kind of to the next level, my sleeping patterns, my what I'm doing from a workout standpoint. I'm adjusting that. So I'm kind of in that fine tuning stage right now around some of those things. So that's a big goal that I have. And then, spend time with my adult kids, when I can. They're busy. They have their own lives as well. But, that's an important thing for me as well.
Excellent. Well, where can people learn more about you, Patrick, and more about Oculi?
Probably the best way to learn about me professionally is, you would go to my LinkedIn profile. I think it's Patrick Henry Quest Fusion still. As far as Oculi, it's Oculi, just like it says on the sign, .ai. And that's our website. And we're actually going through a website refresh right now. So if you check it out now, it might be different than it is in a month from now. But we're really kind of dialing in some of our messaging on the website. And we also, Oculi has a presence on LinkedIn as well.
Excellent. Well, thank you for joining me, Patrick. It was a pleasure to have you on. This was Ari Mahindra.